there is an upside of about 30%. And we only work for the rich and really good, like a stellar performance. So actually, then you're likely to outperform the overall market. Hey guys, I hope you are all well. So you may or may not know that the idea behind starting this channel is really to help and encourage everyone understand the importance of investing and taking control of our personal finances. Keeping with the spirit of helping, the other day I signed up to become a volunteer through my work with this charity called Urban Synergy. They help young people between the age of 10 and 18 reach their full potential when it comes to studies, work, and life in general. The representative of the charity was just so passionate about how much it means to those kids to able to talk to people like us who work in the investment industry, and especially to see that there are also people out there working in the city who look like them. So that basically brought back a lot of flashback for me. It reminded me of the time when I was in school going into university. I was absolutely clueless about what I wanted to study and what I wanted to do as a career. My parents were very supportive and gave me a really good sense of direction to follow. And so I went on to study economics. So while studying economics, I realized that what I truly enjoy doing is something to do with numbers, finance, and economics. But at that time, all I've heard of was investment banking, long hours, a lot of money, nothing far than that. And there was only so much that Googling could do. So at that time, what would have really helped me out is actually to see what it feels like and what it actually means to work in the investment industry. And so I am planning on recording a video from tomorrow morning to cover things like what I'm doing on a day-to-day basis, what kind of skills you need to work in this industry, how much we get paid, what's the diversity like, and things like that. Before getting into the main video, I wanted to clarify that there is more to the investment industry than just investment banking. There is a role out there for everyone from all sorts of background and walks of life. The industry is basically split into two sides. You have the sell side and you have the buy side. Sell sides are essentially known as the investment banking side, and the buy sides are known as investment management or asset management. To put it simply, the sell side conducts a lot of underlying research about a company or an investment, which they then sell to the buy side to be used in their own investment process. And the buy side will take that research, do some of their own research on top of it, and come to a decision around an investment. Decision involves things like whether they should actually be buying that stock in their portfolio. So buy side or the asset managers are really the one who are managing your money through investments that you have made through a fund. Now, what do financial analysts actually do in these buy or sell side firms? There are many different titles for this analyst. They range from Equity Research Analyst, those that come up with a price target for a stock, to Credit Research Analyst, Private Market Analyst, Portfolio Analyst, Loan Analyst, Manager Selection Analyst, Risk Analyst, and the list continues. But what a lot of them have in common is that they all do a lot of different analysis using financial data and tend to hold the CFA designation. So what type of an analyst am I? My title is Equity Risk Analyst. I work in the buy side in a FTSE 100 asset management company. In a nutshell, I help equity fund managers with their portfolio risk and construction. So I will analyze and say things like portfolio X is expected to outperform the market by 5% 95% of the times. Or what stocks to add in the fund to help increase its dividend yield income without compromising its growth characteristic. Or how much will the fund lose if the US interest rate goes up by 1%? What stocks should the fund manager add to the fund to increase its level of diversification? Or is the fund adding value to its retail clients like me and you after you take away all the cost? What are the ESG scores like in this fund? And many, many more. I will make sure to share some examples of work and project as I go through my day tomorrow. So it's nearly 8, and before I have my first meeting in the morning, I would do a couple of things. So basically read up on all the news. So what's happening in Asia, how the Asian market opened, what happened in US, how the US market closed, and what's about to happen in UK. The first thing I would open is FT site, so Financial Times. While I look through the headlines, one thing that works pretty well for me is to actually hear their podcast. So if FT, they do a morning podcast every day, kind of telling you of the headline news and what's going on. So I'm just gonna play that.
The FT News Briefing is supported by Equinor, the Norwegian energy behind British life.
Good morning from the Financial Times. Today is Thursday, November 19th, and this is your FT News Briefing. An audit finds why Brussels has had such a hard time taming big tech. Boeing is once again allowed to fly its 737 MAX aircraft, and Wall Street predicts the coronavirus vaccine will trigger a dollar slump next year. Plus, Boris Johnson outlined a green recovery plan yesterday, and environmental experts say it's a far cry from what's needed.
So I have about 10 minutes till my first morning meeting. Before that happens, I thought I'll just give you a quick brief as to what my day looks like and how am I gonna spend my time. So to start off with, at 8:15 a.m. we have a morning catch up with the team, and then from 9 to 9:45 I am meeting with one of the analysts on the UK desk to go through a DCF model, discounted cash flow model of a train company. I'll share with you guys more on that as the day progresses. And then from 10 to 11 we have what's called the idea day. So all the fund managers and analysts on the UK desk, they are going to pitch for a stock that's kind of categorized as fallen angel. It kind of helps people brainstorm and generate buying opportunities and ideas when it comes to stocks. And then from 11 to 12 I don't have any meeting, so I'm planning to do some work on a project that I'm doing for our dividend fund managers to highlight to him the best strategy when it comes to income investing. I'll share more on that when I'm kind of working on it. And then from 12 to 1 we have another company meeting. So this time we're meeting a pre-IPO company. So this company is currently privately owned, privately managed, but it's applying to go live to the public, initial public offering. After that, I don't have any meetings, so I can have my lunch between 1 and 1:30, because right at 1:30 there is another company meeting. This one is not an IPO. It's a company that we are already invested in, so we already own stocks in this company. The main idea behind this meeting is to find out how the company is doing and talk about their last earnings season. And then from 3 to 4, we are meeting with the sell-side firm who's coming in to talk about their views on the UK real estate market. So that should be interesting. It'll be good to see what they have to say about that. I'll kind of feed back to you guys as much as I can right after that meeting. So, and then from 4 to 5, I have no meeting, but I do have a risk meeting that's coming up next week on our emerging market equity fund. So I'm going to put together a risk report or a pack, which I will talk to the fund managers with next week. So I'll kind of show you guys what risk management looks like when it comes to equity portfolios. And then right after that, we have a wrap-up meeting. So just team catch up for 15 minutes to end the day. So yep, very packed day, lots of meetings, lots of work to get done. So on that note, I'm going to call in now in our team catch up, and yeah, talk later. So as promised, a quick update of what I've just done. So I sat down with our Equity Research Analyst in the company and went over a DCF model. That stands for Discounted Cash Flow Model. So Equity Research Analysts, they would use models such as this to figure out the true intrinsic value of a company stock, and then compare that number to the current share price of that stock and find out what is the upside or downside in terms of total return by investing in that company. So the company that we have just analyzed is a train line company, and I'm not going to, obviously I cannot show you the Excel file of of the actual model, because of work, but I can share with you the formula. I'm going to share it somewhere here on the screen. So without sharing too much, just to give you a rough idea of how big an Excel file can get when you're actually trying to analyze a company bottom up. So this is the first page. I don't think you can see very well, which is good. You have some of the high level number here and what is the actual upside that's likely to come by investing in this company. So at the moment, there is an upside of about 30%. So there are a lot of different assumptions that goes into this module, such as the discount rate. What number would you use to kind of compare future value of the company into current terms? That's the discount rate. So what lies behind this first page or numbers are even more numbers. So you would look at the drivers of this company. How are they making money? How likely are they continue to make this money? Can you make a good assumption on it? If not, how confidently can you make those assumptions? What are the current income statement and current balance sheet like? So there is a lot to kind of go behind the scene when it comes to analyzing a stock, until you obviously come up with a number like the target share price of the company before you kind of make that purchase. The main reason I just had this meeting is to kind of understand the assumptions that they're making, because when it comes to discount rate, what we have noticed is that if you change the discount rate in your model even by little amount, it changes the ultimate price of the target company that you're analyzing. So I was literally trying to understand the sensitivity of interest rates to the overall stock price. So that's the quick update from my first meeting. So we've had this really good Ideas Day meeting where we heard about 10 different pitch on a fallen angel stocks, so stocks that have fallen for no good reason, maybe due to COVID, but are angels in the sense that they're likely to continue to outperform going forward. So one of the fund managers that I have huge respect for, he's a small cap quality growth fund manager. He mentioned and pitched this AIM stock that I've actually never heard of. And the type of things that he said, he mentioned about how they have this really good customer base, and the reason why they sold off so much after COVID was just like a market reaction and nothing to do with them. They have a very solid business, they have a really good profitability metrics, and their stock performance right before COVID was like really good, like a stellar performance. So actually he really sold it to me, and you know what, I'm thinking whether I should even buy that in my own portfolio. Maybe I will. I'm gonna do some own research and read a bit more about the stock and learn a bit more about it. Next, I don't have any meeting, but as I've mentioned, I will be working on this really cool and interesting project on income funds. But before I kind of talk you guys through what I'm working on, I promise you it's super interesting. I think I'm gonna need my second cup of coffee now. So yeah. Let's talk about what sort of skills you would need to work in this industry or become a financial analyst. Starting from being a student. So if you are a student and you are thinking of going into university, then there are certain subjects that tend to be looked favorably compared to other subjects. So if you have studied, or if you think of studying anything from maths, economics, finance, physics, then you're much more likely to kind of stand out compared to the crowd. It's not to say that if you study other subjects that you won't have any chance, because there are roles out there which caters for everyone from all walks of life and all walks of educational background. However, just talking from my own personal experience, also while looking through a CV when we were hiring in our team, it does seem like if you want to work in some of this investment related industry, if you have those subjects, it's going to help you out, especially starting out. Now, moving on from education, and if you think of professional qualification, you would see that a lot of financial analysts would have the CFA designation, so Chartered Financial Analyst. It's not something that you need to have before you start working in the industry. It's something that the employer would actually pay for you to study towards. Now, let's move on to skills. And so last year I attended the CFA annual conference, which was in London. They've done some really good industry research and came up with 3 types of skills that are mostly sought or valuable when it comes to working in the overall investment industry. So starting with technical skills. So what they have identified is called the solution skills. So do you have the technical expertise to come up with solution to a pressing problem? A good example would be our current demographics. So as we all know that we have an aging population problem in UK and also across Europe. So we will have to come up with creative and innovative solutions and investment ideas to cater for ourselves in the near future. So that's one way of thinking of solutions to problems. Moving on to the next set of technical skills are the investment skills and economics. Investment skills basically means your ability, technical ability to understand a company, analyze their data, and also looking at some of the statistical analysis that goes with analyzing companies, industries, and the economy. So those are kind of the technical side of it. Moving on from technical are the soft skills. That's actually really important in the industry, believe it or not. So the first one they have came up with is creativity or innovation. So are you able to come up with creative and innovative solutions to a problem, or find ways to work and do a same task but much more creatively and think outside the box? So if you are a natural at this, if you are able to think outside of the box and you think you are quite creative, then this is actually going to really help you out, because as well as being one of the most sought after skills to look for when it comes to soft skills, creativity and innovation is actually one of the hardest to find in the market. I'll share the picture here somewhere as far as they have done their research within the investment industry. Now, moving on from soft skill, there is another set of skill that they call T-shaped skill. It's basically a way of saying that you have a subject matter expertise on something, but at the same time you're able to work across different discipline and adapt to changes and needs as the company or the industry requires. So yeah, that's all I wanted to add about skills. I hope that was useful. Right, so this project that I am working on right now, the idea behind this project actually comes from a book called The Strategic Dividend Investor by Daniel Paris. One of the findings of the book suggested that if you, as an income investor, actually concentrate on investing in companies that are on the top third quartile of their dividend yield range, then you're likely to outperform the overall market. And the author of the book done this research on their US company, and the date range ended just before the financial crisis. So the fund manager that I'm working with, he suggested to me whether I can replicate that study and work on the UK equity fund, so on the FTSE All Share companies, and also obviously extend the time period after the global financial crisis. So that's exactly what I'm doing right now. So if my analysis suggests something is also true when it comes to the UK market, then I think this is going to be pretty big. It's going to really help shape how the fund manager manages and constructs his income portfolio. So the company that we have just met, the management is really good, very driven, very different, very kind of like, kind of selling you this vision of this huge growth company that's about to come online to the market when they go over their IPO. So they are promising some really heavy growth in this company. They mentioned how they've acquired companies like on a daily basis, like 250 companies over last year. So yeah, they're focusing very much on growing by M&A, so merger and acquisition, mainly acquisition. So they will buy out smaller companies to make their company much bigger. So I think the question now is, can they actually continue to grow like that, and how far can they go? Even if they are acquiring a lot of companies, how well are they integrating those smaller companies to the overall business? What is the cost like? Are they actually getting a higher return from those investments? So I think there are a lot of unanswered questions. What I'm going to do now is quickly tidy up all the notes that I have taken for the pre-IPO company before I go off for lunch. Basically, for lunchtime, when I used to work in the our normal office, I used to just go down to shops. There were lots of shops So Legion Hall Market was nearby. There was lots of other little marketplaces nearby for grabbing some lunch. And I love food. I love trying different cuisines and things like that. So I used to try different types of places for lunch every time. So the meeting that we have about now, I'm quite excited about this meeting, looking forward to it. So the company we're about to meet, they provide industrial and electronic services, solutions across the world. They use AI and cutting edge technologies. So that always gets me excited. So yeah.
Oh man, I know how you feel. Third wheel. I have been the third wheel so many times in my life.
Obviously, we've seen share prices move a lot the last couple of weeks due to the vaccine news that's fast to talk through. What we've got on that chart is what would have to happen to property valuations for the NAVs.
So when it comes to investment risk, it's all about numbers, statistics, and assumptions. We are basically trying to answer questions like, what is the maximum amount of money that we can lose in this fund over the next 1 month, given, say, 95% of confidence? We call this number VAR, value at risk. Another way of thinking of risk when it comes to mutual fund is answering questions like, by how much is this fund likely to outperform or underperform the overall market over the coming years? So it's all about estimating and giving a really good prediction of the future performance of the fund. So as you can see, it is heavily number-based, and we calculate these numbers using a lot of different statistical analysis and modeling. So is this the right industry for you? Should you be looking to work in this industry? Yes, if you are thinking of entering this industry, I would highly encourage you to do that, especially if you are from an ethnic minority background or a female. This industry, I would admit that is very much male heavy, so it's still male dominated still now. But you know what, at the end of the day, it's not a scary place. All the people that works here, all the people that I have worked with, they are actually very helpful, they're very encouraging, and they do want to improve the balance when it comes to gender or ethnicity or any other ways that you may look at it. So good things are happening in this industry. So for example, my company, and I know a lot of other companies, have signed up to a charter where by 2025 they will at least have 40% of board member as female and 20% ethnicity. So these things, they take time, but it's happening. So if you are thinking of entering this industry, this is the perfect time. Don't be disheartened by observing what it looks like currently or in the past. Let's talk about money. How much do financial analysts get paid? So as I've mentioned before, there are so many different types of title to go under financial analyst. But in this bit, I will focus on those that are categorized to fall under investments. The starting salary, so starting with zero experience, in this field is about 30K, so 30 to 40K, depending on which role you start off with. And then as you progress into more mid-level, so if you started to get 5 years experience or so, you can see the number ranging between 50K to 70K and can obviously go up. And if you are more on the senior side, so if you have 8 to 10 years of experience, then you can expect the number to go ever above 70K, so 70, 80, 90K. And this is just the base salary rate. A lot of these roles, they do also have a decent amount of annual performance bonus. So the bonus level can range from, say, 15% on top of this number to over 100%. And that, those on the higher end tend to be those that work directly with monies. That role comes with a lot of stress anyway, so I think they are more than compensated for that. Another point which relates to the industry, which may prevent you from applying or exploring, is the fact people think that it's a bad industry. You know, we work with money, we work with investment, we only work for the rich, and you know, all that kind of negative thoughts. I really don't believe that. I don't think that's true. At the end of the day, we are doing something really good for the people and the economy. So if you think about it, all the money that we are managing, it belongs to people like you, people like me, people like our parents, our grandparents, colleagues, friends, family. And at a personal level, like what I do every day when I start my work, I always imagine the end person or the client whose money we are managing. I literally think of this individual. I know that we are managing money for pensioners who need a regular source of income right after their retirement. We're also managing money for charities who needs that investment or that income to pay towards their cost. So you know what? You can actually feel good about yourself by working in this industry. And there are some real good opportunity to actually make a difference and a positive impact. So on that note, I'll switch off now. I hope you found this video somewhat useful. If you do have any questions, feel free to ask me. And until next time, look after yourself and enjoy.